All right, I believe audio's going well. Yes, buddy, you're fine. You're fine. We've got 4 minutes until we're supposed to start. Let me start out by saying if you're seeing all the yellow circles, it's because we were trying to figure out the mouse settings, and for some reason it made the mouse completely gigantic and has yellow circles. What I see on my desktop is different from what I see on the streaming software. So, not sure what's up with that. Not sure what y'all are seeing. You can comment for me if you want. Okay, I guess, let's see what all we have going on here. I got about 3 minutes. Just gonna let people kind of figure some stuff out. Let's see if that works. Create a channel to join the chat. But aren't I? Oh, that's why. Hold on. Oh, I'm putting so many yellow dots all over this thing, man. Oh, Alright, it won't change. Note to us, we need to figure out the working of the chat with this software. I don't think this is the actual YouTube chat. So if you are making the comments right now, just beware I can't see it right now. Sorry. This froze. Oh. Use the docs menu. Okay. Okay, but it didn't sign me out. And it's not giving me an option to sign out. We've got 1 minute. I haven't forgotten everybody. I'm just trying to figure out what's going on. Well, I can do this. I can do this. I can only see the chat. I can see the live chat. So maybe I'll just do a few shout outs and we'll do a follow-up. Oh, it's trying to get my attention for something. I see. Okay. There we go. We're at that. Making sure I'm not running over a kitty cat here. Okay, well, I am going to start. I'm going to give a bit of an explanation. Hopefully, we can figure out why the circle is not hanging around the mouse. And according to what I see, you can see a gigantic yellow mouse. But on the streaming software, you don't see the mouse, but you see it when I highlight an element in Canvas. So I am unsure. We are going to start because it is 7:30 Eastern Standard Time, and I want to thank everybody for being here. And why is that? There we go. There we go. Nope, we'll do that. Oh, no, I guess. All right, well, instead of sending it to the tech team, why don't I play tech? There we go. That is a much better spot for the logo because I'm over here in the corner. All right. Let's get into asset equals liability plus equity. What does it mean? Do you need to care about it? And what are all these little debit and credit things and what do they mean? Bottom line is, yes, you need to care about it. if you have a bank account, if you have a source of income, if you file taxes. You need to know this. You need to know this. This really should be part of every, I think, sophomore year maybe of high school when a child is 16-ish, or maybe even 15-ish. Maybe they've had their first job. Maybe they're about to get their first job. You need to understand this. Assets are everything that's of value for your company. Liabilities are everything that's costing your company. And equity is the money you're going to take out. You guys can't even see my mouse, can you? Oh, there we go. We figured out how to get the mouse in there. All right, sweet. Cool, cool, cool. I will attempt to not click anything so there's no more forever yellow dots on the screen. We'll figure that out later on. But yes, all right, we've got assets and they equal liabilities plus equity. On this side, the left side, that is everything bringing money, bringing value, bringing revenue into the business. I want you to think that. Really just kind of do this if you're in a safe position to do so. Put your hands out in front of you, bring it into the shoulders. You're bringing in energy, you are bringing in capital, you are bringing in information into the business. Credits. I want you to put your hands at your shoulders and push out like you're doing an air push-up, if it's safe to do so. If you're driving a car, don't do this, please. Put your hands on your shoulders and push out like a push-up. That's a credit. The credit is, I'm sorry, that's a liability. It is a credit, but I'm getting ahead of myself. Liability. That is a liability. You want to try to hold yourself away from liabilities as much as possible. These are the things taking money out of your business. These are the things having legal obligation or people who haven't paid you yet. So you've given the product or service, but you have not received the revenue yet. That's a liability. Equity. This is the shareholder or the owner's equity. I have a lot of real estate clients. This is not about equity in a property. You use the same terms, but they mean different things. It's like saying you know or you know. There's two different things. One is something K-N-O-W, one is N-O, okay? Very different things. I'm sure there's tons of other ones you can think of. They're just not coming to my mind right now. So whenever you see asset, I want you to kind of bring your arms towards yourself. That's what you're bringing into the business. When you see liability, I want you to push up, push away the liability. Owner's equity, push that away. That's taking away value from the business because at some point that equity is owed to the founders or the owners, and it will come out of the business. That's why you have to keep track of it. It will come out of that business. That owner or that founder is rightfully due what they have put into the business. That is their shareholder equity. So we're going to get into debits and credits. Why do we need to have debits and credits? Because in accounting, which is what the United States government uses, and every single government I've ever seen uses. So if for nothing else, you do it for the same reason that you file your taxes. Whether you like it, you hate it, you agree with it, you don't, it doesn't matter, you do it. So this is how they do it, and we're just teaching you how. So for every debit entry, there must be an opposite credit entry. It has to be equal and opposite, okay? So for an asset, when it's bringing it in, what's happening to your money? It's going up, right? Your money is going up. So you're bringing in that debit for an asset. It's adding to it. When you have a credit to an asset, that's taking it down. That's taking it away. So when you credit an asset, you're taking it away. When you're debiting an asset, you're bringing it in. Come over to the other side of the equation and think about this for a second. Just imagine you have a business and your liability is going up. You owe more money. You took out a loan and you owe more money. So what just happened when the liability went up? Where did your money go? It went away from you. Do the push-up. Lift your hands up and do the push-up away. I know a lot of people laugh at me when I first teach them this, but I have had so many people tell me, oh my God, I was sitting there in QuickBooks and I can't help it. I'm like starting to feel my shoulders move or my hands raise or lower, and it reminded me of what I'm doing. There is a reason for me doing this. If you have an asset and it goes up, you're bringing it into the business. If it goes down, it's pushing away. It's a credit. But when you have a liability that goes up, it's taking away from the business. So if a liability goes up, it's going to push away profit. But if it's a debit, if you paid off that loan, it's now going to bring in money. You no longer have to make those payments. You no longer have to pay interest. So when you debit a liability, your liabilities are going down, which is helping your business. Same thing with the owner's equity. Think about it. If the owner puts in more cash of their own personal hard cash, they inject $100,000 into it. Yeah, the equity went up, but the business has to pay that money. So what's happening for the business? It's pushing away. It's paying. You got to push it away. And if it's going to debit the equity, we pay that money back from the business. Now that's down. It's gone down. The equity's gone down. So what does that mean? Oh, now the business can take in more. Bring it in. Bring it on in. That can take more. I want you to start really visualizing the flow of money from any entity. When you can start visualizing this and really just getting it into your body, it's going to make doing your books so much easier. And honestly, you become a better business owner because you will start seeing, even before you make a purchase, even before you get into a deal, you'll start going like, oh, okay, asset goes up. Yeah, bring it on in. Okay, wait, liability goes up. No, I'm going to have to think about that. So asset equals liability plus equity. If these are new terms to you, please just understand that the more repetition you get from this, the better it's going to be. What are these down here? What is revenue, expense, and dividend? Well, revenue is money that is coming in. Expense is money that is due, like your lights, and dividends are a debit. Oh, sorry. Yeah. Okay. I see. Okay. Great questions. Great questions. I got to learn how to kind of ignore that screen for a while I do this. But that is, yes, it does help. Yes, the hands help. It really does. The hands help. If these are completely new to you, and all you do is like screenshot this, or we can make it available in our store, thereiledger.com. Go to our store. We will make this available within a week and download it. I think they're like $2.99, like our costs and whatnot. And don't tell me it doesn't cost to make something, because you have to pay for the software and you have to pay the employees' time. I'm not running a sweatshop over here. If any of my people are putting an effort to something, they're going to get it back. And the way I run my firm, if anybody makes money, everybody makes money. So there is no such thing as pitting different teams against each other in my business. What is it? High tide rises all ships or something like that. That's what I do. So it is $2.99, or, I mean, you're watching this right now, screenshot it. And like, if you really need to just have it for free, screenshot it. But if you want to help the team and appreciate somebody who's taken effort into giving you this information and into dragging me out of the office and getting me in front of the camera here, then, go to the store. Anyway. Okay. So we have covered, and I'm going to say it as many times as I need to, asset equals liability plus shareholder equity. For my non-real estate people, you might be wondering, why is she like pushing on equity so hard? The reason is that when you have a house, like say you have a rental property, what your mortgage is versus what is paid off from that mortgage, your after repair value, that's what a real estate investor calls equity. You have equity in the property. And I have had many people get confused and be like, well, I'm not going to take away all the equity in my properties. Equity is an asset. A property equity, yes, the equity in your property is an asset, but the shareholder equity, the amount of the business that an owner or founder owns, that is on the liability side. So this is why I'm driving this home a little bit more and a little bit more and a little bit more. You have revenue, which is a credit, expense, which is a debit, dividend, which is a debit. Why does any of this matter? Because for every action on your bank ledger, there's an equal and opposite reaction. Let's just say you take out a $100,000 loan, liability. Your liability goes up, that's a credit. So your assets go up. So both sides are going up because that $100,000, let's just say it bought you a new work truck. And that's kind of business you're in. You're in a landscaping business, you need a new work truck. The liability went up and the assets went up. So to any, typical self-employed like my parents were, their logic would be, well, both sides are going up, so they can't be equal. Well, that's not true, because when a liability goes up, it's a credit in the right-hand column, at least the way that we do it. And when the asset goes up, it's a debit in the left-hand column. So it's equal and opposite. This is why I make everybody I know copy this cheat sheet, for lack of a better word. I call it a reference card, but everyone calls it a cheat sheet. So there we go. I don't think it's cheating to have a reference. But whatever. Maybe I cheat a lot in life, I guess. I don't know. The important thing is to accurately understand what's going on, because this is what happens. If you say to the government, I made $100,000 and I have $100,000 of assets, guess what they're going to say? We're going to tax you on $200,000. You want to be taxed on $200,000? I hope you're saying no. I really hope you're saying no. You need to have both columns. Another thing is that if you are doing your own books, which if you're a business owner or an investor, I strongly disagree. I don't even do my own books. I strongly disagree, because as a CEO, as an investor, my focus, my attention needs to be on the acquisition and the exit. The maintenance part, the middle part, the hold, that needs to be delegated. I need to have property managers. I need to have bookkeepers. I need to have people who are doing the middle stuff, the hold for me, so that I can go out there and acquisition. Right now, this is acquisition. I'm acquiring new attention. I'm acquiring potentially new clients. A side note, because there are lots of questions, we do use QuickBooks Online for what we do. I am a QuickBooks Pro Advisor Level 2. I have been asked if we're willing to start opening up and training on QuickBooks Online. That is something that we will look into and to see. But for right now, we do the books for other people. We haven't really turned to the QuickBooks education. That would kind of make us a different company. That's my concern. So we'll figure it out. Yeah. Okay. I'm gonna do something here for y'all. Yeah. Let's All right, guess I made a new page. Didn't mean to, but that's all right. Works for us too. All right, we are doing a text document here. So for the next one, I think that we are going to try to have 4 quadrant notes, I guess is the best way to say it. I want to have it to where we have 4 different areas. Yes, this is how I run my meetings. You can ask anybody. I'm always trying to get the notes on the table. We're going to middle those. That way they all are equal. All right. So this first section here. Oh, I said I wasn't going to click. Oh, I don't see it clicking up on there. Okay, well, I see yellow spots all over the place. Tell me if you see yellow spots. No yellow spots for you, just yellow sticky notes. Yeah, the sticky notes are supposed to be there. Ooh, buddy. Mama's filming. Yeah, you're fine. All right, so the first stage is the prep. The second stage is the acquisition. I hope I spelled that right. Can't see through all of this. And this will be on. We will figure out this technicality, right? We'll figure it out. Like I said from my very first episode, start ugly. You know, it's just a matter about consistency. We'll get better as we go. So the third stage is hold, and the final stage is to exit. Why does that look so bad to me? Oh, that's why. Hold on. We are going to position tidy up. There we go. Now everything's pretty. I like the pretty. Okay. So why is it that having double entry is so important for these stages? Oh, can't even see those stages. Slow the stages over. There we go. So in your prep stage, this is when you're thinking you're going to get a property, you're looking it over, you're considering getting that new construction loan, maybe you're considering starting up a REIT or anything like that, whether you're a hard money lender, a wholesaler, fix and flip, LTR, STR, whatever you're doing, land. To me, land is it's not single family home, it's long-term rental. That's why we say LTR, and it's short-term rental. And there are people who are doing land short-term rental. I had to have a conversation with somebody the other day. There are people who Airbnb land. It's literally just land. And there are people who will pay for it. They want to go camping, but they don't want to go to a national park, or they want to ride their ATVs, so they're looking for a land that has hills or something. Like, you can do LTR and STR on land. So that's how we do it. Anyway, so that's the prep. You're deciding what you're doing. In the acquisition, you're figuring out all of your assets and all of your liabilities. If you do not understand how to acquire a property, using this mentality, understanding that you will get assets, but you're going to get liabilities when you're trying to take over a house. Let's say a wholesaler calls you and says, I've got the deal of a lifetime. There's this $500,000 house. I can't even believe I have to say that number. That's ridiculous. But, you know, there's this $500,000 house, and this person has just gone through a divorce, and they're just a total headache, and they're willing to get rid of it for like 50% of the value, and their mortgage is over halfway paid off. Hold on a sec. Milo. Milo. Mommy's talking. Yeah. He will get louder and louder if I don't acknowledge him. So you have the asset of a mortgage. Let's say it's at a 4% mortgage. And you have, that would be the liability. Sorry, that would be the liability. Your asset would be the equity of the property. And let's just say you couldn't quickly get a loan, or you didn't want to wait for the process, and you injected $100,000 of your own money for repairs. Told you he'd get louder. Boo-boo. What is your problem? Hold on, technical difficulties. Milo wants to go for his walk. And yes, my cats walk on leashes. So you have your asset, which is the equity in the house. You have the liability, which is the mortgage. And then you have the equity of what you put in of your own capital. And newbie investors think, okay, that's it. I'm done. I know the numbers. We're good. I've got the repair costs. I've got the mortgage cost. I'm good. But you're not good, potentially. What if you have tax liens on it? What if you have, the mortgage is actually in second position? How did that happen? There are a lot of hidden things that people don't think about, like when they get a foreclosure and people will go to the auction sites and they think, wow, I got this house at a great price. And then they find out the person is like 8 months behind in payments and they have an additional $30,000 that they have to somehow come up with. The reason why I want real estate investors to start understanding how bookkeepers keep their books is because it's like getting married. Everyone says, do you want a prenup? Are you going to write a prenup? Well, that's not the right question because you have a prenup. You absolutely have a prenup. It's just whether you and your potential spouse write a prenup together, or in case of an eventual breakup, you trust the government to write your prenup for you. You have a prenup. So just like when you get into real estate, you have books. You already have the books. But when you have a bookkeeper, especially a competent bookkeeper who understands real estate, that's going to be a much better asset than just continuing to collect receipts in a box, then handing it to a CPA once a year and paying a huge ass fine to the CPA and then a huge ass fine to the government and going, whatever, I'll just go make more houses. You can't do that. Lots of people do that. I don't recommend that process. I just don't. I don't think that's a great way to do it. Okay. Okay, I see. Oh, there's some complaints that I scrolled down too much. All you see is the extra of Canva. It's not like it's top secret. I'm using software, so I don't care. If you care more about how the podcast looks and don't care about the message or the learning content in it, I don't think you're on the right live. Like, this isn't for you. I'm talking to people who actually need to know this stuff and apply this stuff and make lots and lots and lots of pretty happy memories and lots of pretty happy bank accounts out there. That's the goal, not to look pretty. So let me come back down here. There are 4 stages of everything. If you can keep your books properly balanced before giving them to the government, what does this mean when hiring a bookkeeper? Well, the first thing it means, if you use QuickBooks Online to have your bookkeeper, which is obviously what I recommend, I'm CEO, I'm going to represent. Let's say you're the investor, we're the bookkeepers. You, the investor, would send us, the bookkeeper, an invite after we've talked. Please don't go sending us a bunch of invites. After we have set up a consultation, which you can do on our website, you can give us an invite to see your QuickBooks. You do not ever, 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 can I say that loud enough? Ever give your personal QuickBooks logins to a bookkeeper or CPA. Never. I have heard horror stories where they hired a bookkeeper, gave them their personal login, and gave them permission to do payroll. Well, guess what happened? After 2 years, they're out $214,000. Guess who started giving little bits of payments to themselves? Not me. I would not do that. The bookkeeper did. So just like you can have a bad contractor, personal story, one of my personal people, she's been trying to build a house. It was supposed to be done in November, and here we are in February, still not done. And she started finding out that money she gave him for specific things to be done, like the concrete and the windows, never got done. And when she said, "Where's your money?" He's like, "Oh, I give it to this person." Well, this is a small town. She was able to go right to that person, and they were like, "No, we've never gotten that." And so now there's lawyers and courts and a new builder. So just like there can be bad contractors, there can be bad bookkeepers. But if you have one experience with a bad contractor and then you said, "Screw it, I'm doing all the contract work myself for the rest of my career," how big is your portfolio going to be? I hope you're joking and laughing and being like, "Yeah, no, you're not going to get much done," because it's true. Same as with bookkeepers. If you have a competent, capable bookkeeper, especially if they offer the fractional CFO. If you don't know what that means, I'm sorry, let me slow down. Bookkeepers basically record your previous transactions. They tell you history, and CFOs tell you future. They tell you cash flow. They tell you projections. So if you have a competent bookkeeper, just like if you have a competent contractor, they can save you headache, save you time, but they also save you future headaches and future time, which is why I'm a huge proponent for every single real estate investor to have a bookkeeper. Even if all you do is buy and hold for the rest of your life and you've got no intention and it seems easy and simple, that's great, that's fine. Have a bookkeeper, but do not give them your personal credentials. Oh, he's scratching the door. Hold on, guys. Oh. All right, Milo's gonna have to make an appearance. He already has people taking little selfies of him when we're walking in the park. They love him and his little collar. Oh, buddy. Yeah, say hi. Say hi. He's like, "Mom, what are you doing? I just want to go play." Yeah. I'm gonna have to train him that every time he interrupts the podcast, I'm just gonna hug him and love him. Kill him with kindness. Ready to go? All right. If you can't tell, these are live and unscripted. We'll slowly start making visuals and having those visuals available in our store. We would like to give helpful quality information, but it is kind of a fine line. We are not we don't train bookkeepers. We help real estate agents. So I have to walk kind of a fine line because I don't want to lead my company in the wrong direction. Maybe we will start another company. I don't know. It's a little much for me right now. I got a few of them going on, but we'll see. We will see. All right. It has been half an hour. I am not able to see or respond to live chats, but I'm seeing my team's in-person little chats. Okay. Well, this was a test live. So what things went well, what things went bad? Well, I would say it was well. Oh, see, you can't see the mouse again. All right. Technical difficulties, but it was better than our first episode. And I think I said episode 2, but I think we're on 3, aren't we? Yeah, because we had the pre-recorded, then we had this morning, so this is actually episode 3. Look at that. Episode 3. We'll go up here and change that. Episode 3. Oh my gosh, now I've got all these yellow dots all over the place again. I will come over here and make you look at the camera again. Yeah. All right. Okay. Cool. The feedback that I'm getting are that the tests are going well and that we should have more of a complete test. And yeah, yes, give Milo a treat. That is the last thing you want me to do, because if he learns he comes in here and meows all the way through an episode, guess what's going to happen? He's going to be interrupting every single episode from here on out. Perhaps what I can start doing is having someone walk him or something. His brother Ren's doing pretty good. Yeah. Okay, before this turns into an in-house hangout, this is a public forum, so let's just end the live. But we see that we can improve some stuff. That mouse thing has got to change. I cannot have that mouse on my computer, so after we close this out, we got to figure that out. That's going to drive me crazy. But this was good. We were able to move back and forth. We've got the layers well. It's not doing the desktop audio this time. It's picking up the mic, so that's a good thing. We had the fade. That was good. Yeah, make a note. The negative was the chat. Yeah, I couldn't sign into the chat, so let's fix that. And if you're watching this, whether we're currently on February 17th, 2026 at 8 p.m. Eastern Standard Time, or you're watching this years from now, I want you to watch these episodes in order if you're an entrepreneur or you know an entrepreneur. Have them watch these in order. I know I've had a lot of pressure from people like, oh, make it pretty and polished. And I said, no, we had the idea. It was a good idea. Run with it. And we're running with it. And we're figuring it out as we go. I call it failing forward. Always fail forward. If I can fail forward on just one thing a day per company, I'm moving all of them in the right direction. It's like I'm a CDL Class A trucker, hazmat tanker double. And when you're going uphill, loaded 100,000 pounds, and it's icy and freaking dangerous, and you're making sure you're in the right gear, even if you got to drop down to granny gear, which has happened when I've had to train, gentlemen on how to actually run a manual. When you're trying to climb up a mountain, as long as you're moving forward up the mountain, you're okay. You're fine. You are fine. Just keep it easy, keep it in granny, keep the gas gentle. It's a manual, gentle. You don't need to kill all your fuel. Just keep it going, keep it going. Just relax, chill, watch the snow fall. You will eventually get to the top. The only direction that you fail at is if you start going backwards. You do not want to roll backwards on a mountain when you're basically driving a dirty bomb. Terrifying. Don't do it. So in all of my businesses, if you're moving forward, you're in the right direction. So let's go in the right direction. I know we had talked about having these be about an hour long. But if we're going to be so super specific like we've been asking about, I don't think we should make these a full hour. It's super specific. So why not make them just like with the morning ones, 20 minutes to 30 minutes of content, and then afterwards it might turn into an hour worth of questions and conversations. But I think we would add a lot more value, because honestly, after 30 minutes of people having to digest this equation into their brain, it's pretty difficult. It's pretty difficult for a lot of people. Yeah, you think so? Okay. Okay, so it sounds like we have consensus. All right. Tomorrow morning, it will be a motivation. It will use this live stream information again. And then we will, and I figured out, anybody who's trying to do YouTube or trying to do streaming, as of 2026, I don't know when you're watching this, in YouTube, it does a live, and it keeps it forever, doesn't just auto delete, which is awesome. After 24 to 48 hours, their AI gives you subtitles. You can go into the setting and hit duplicate and edit, I think is what it's called. Then you can go in and you can actually edit your subtitles. So you don't have to do the whole thing by yourself. You can just go through there and be like, oh, you know what, this word was different, or that word was different. Oh, I said Bosch, not Bass. Why did it say that? Anything like that. You can go through and edit and make it more presentable. And then your live is one product. Like being here live, the value is the chat, which I can't get into today. So I'm not providing value in my mind right now. But afterwards, you can edit the video down to just the meat of the video for the YouTube audience. The YouTube audience does not want to see me rambling on. They probably don't care about my cat. They don't care about the team and what we're saying. But that's okay. That's okay. Start ugly, keep moving forward. Maybe that's what I'll make for tomorrow's motivation. The morning time is like motivation. You're starting your day. Let's get going. You've already got a shit ton on your plate. The evening time, hopefully you're winding down and you're ready to be like, you know what, let's dive into something. And so I'm trying to give a very specific thing, one specific important thing at a time, and then answer questions and we'll move forward. So, yay, okay. All right, awesome. What did I have for dinner? This is my emergency candy tray for when I've been at the computer for like way too many hours and my glasses are bothering me. And I'm like, oh my god, my brain can't function. I supercharge that. So yeah, that's been my dinner so far. I'll do something healthier later. All right, guys, I think we're going to call this a wrap. I've had enough for today. We will figure it out and get back at it tomorrow. All right, awesome. Thank you guys for being here. I appreciate it. And hey, we'll get back to it. We'll figure it out. We'll do better tomorrow. Y'all have a great night. I am coming. I am coming. We'll figure out what he wants. Yeah, he wants a treat. No, he wants a walk. He wants a walk. We'll go out and walk around the property and then come back. And mommy has to walk him. So yeah. Okay. Oh, that's right. We are not on YouTube Live, so I don't push a button here. All right, guys, hold on. Scene, sources, audio mixer, scene transition, control. Stop streaming. There we go. They make it easy. Auto stop. Well, let's stop streaming. Okay, y'all. I will actually say goodbye this time. You will not be able to reconnect. Your stream will stop and you will no longer be live.